Okay, so after yesterday's crash, the S&P is still correcting. We are about to lose the 4K, which is a very important support level, a round number, a psychological key point. What's more, this 4K is very close to the 50% Fibonacci's retracement in the weekly chart. And if we lose this key point, this crash on the S&P will probably continue and it will seek lower levels. What's the next support level for the index, and is there any hope that it could reverse this bearish sentiment? Well, we'll see in this video. Welcome to the Finance Hydra channel. My name is Nathan. Let's update our thoughts on the S&P index right now. First and most important of all, yes, we did trigger a bearish pivot point on the S&P, meaning we did a lower high, lower low. We lost the 4060 over here, which was our previous support level, and right now we just retested the next support level around the 4K. Alright, great. In addition, this 4K is very close to the 50% Fibonacci's retracement in the weekly chart, meaning what we have over here is a dual support level, which we see in two different time frames. Okay, so we are in a crystal clear support level right now, a dual support level. Is there any bullish reaction right now indicating that the S&P could reverse this bearish sentiment? Well, no, unfortunately not. Right now, we don't see any evidence that the S&P is going to reverse the bias. We don't see any technical bullish indicator telling us that, okay, now we found a bottom level over here. No, there's no bottom sign. There is absolutely no bullish reaction on the index right now at this moment. If we do see a bullish reaction, okay, maybe the S&P is going to bounce. Maybe it is going to be a dead cat bounce, because even if we see the S&P bouncing from here, it has many resistance levels to work with in the short and in the midterm in order to actually reverse this bearish sentiment over here, in order to reverse this, reject this bearish pivot point in the daily chart. The first technical resistance level on the S&P is the 4060 over here, midterm speaking, of course. In the midterm, the 4060 is going to work as a ceiling for us. Even if we bounce, we have this black line up here to hold the S&P's price. What's more, this price level over here is a little bit above the 38.2% Fibonacci's retracement in the weekly chart. So see, even if we bounce, even if we do react, right now there is no reaction, but even if we do react, the S&P will have to face this 38.2% Fibonacci's retracement. If we break the first retracement, it has to retest the next resistance level around 4060, and this is it. Any bearish reaction, any top sign in this area might indicate that the bear trend will persist a little bit longer. What's more, right now the 10-year yields are going up. It is we are breaking this resistance level over here. We already broke this purple trend line, which was indicating a bear market for yields over here. We broke this purple trend line. We are above the 21 exponential moving average, and right now we broke the previous resistance level over here, indicating that yes, yields are clearly bullish right now, and the market is not gonna truly react as long as the index, as long as yields keep doing this pattern over here, as long as they keep doing this movement over here. VIX, the fear index VIX, is also quite dramatic right now. We broke upwards this descending channel. So yes, the volatility is quite high. The S&P is supposed to continue its pullback. And right now there is no clear top sign on neither treasuries, neither on the 10-year yields, nor on the fear index VIX. So, okay, this situation is quite problematic. So in the end, it feels like we are more bearish than bullish right now. In my humble opinion, we have a very important resistance level in the short term on the S&P, which is 4015. See this red line over here, right here in the middle of this chart. This red line at 4015 did work as a resistance level 2 times over here on January 17 and on January 18, and it did work us a support level 3 times in January 26, January 30, and January 31 over here. Right now, today, this key point did work as a resistance level again. Today's high was 40.17. It is just at the 40.15 area over here. So it feels like this red line is our most important resistance level short-term speaking. If we break the 40.15, I do believe the S&P is going to bounce to the next resistance level. I'm not necessarily considering the first retracement because, in my humble opinion, the S&P has more to bounce because the 40.60 is not only the previous support level supposed to work as a future resistance level for us, but it is quite close to the 21 exponential moving average as well. So this key point over here is a dual resistance area for the S&P in the daily chart. And as long as we stay below this dual resistance area, the S&P is not going to truly reverse the bullish sentiment. And remember, if you want to trade with me, check my website. The link is in the description of this video. Public track record. We are doing insanely well this year. I think this year is going to be the most promising year ever for us. So seriously, join us. Check my services, check my website. The link is in the description of this video. Now, okay, so in order for the S&P to materialize a bullish rally, we have yet to break these resistance levels over here. But what if we don't? What if we keep dropping? Well, technically speaking, the next support level on the index, the first mid-term support level is at 39.48 over here, which is a bottom level on January 25. So we could easily drop a little bit more, meaning we still have more, roughly 1%, 0.85, 0.9% to go. If we do any bullish reaction in a crystal clear support level, maybe the S&P will present an opportunity to buy, but right now there's not a single bullish reaction. What is even more problematic is that the S&P, in the weekly chart, the next retracement is the 61.8% Fibonacci's retracement, which is around 39.30. So in the weekly chart, a long-term support level indicates that we could drop more than 1%. We still have more room to correct. We could easily retest any of these support levels. Therefore, it is very important to watch the S&P from now on, to watch these key resistance levels, because if we break these resistances, maybe we're gonna see another bounce in the S&P. However, we'll see, right? I'm gonna keep you guys updated on this channel. If you are still not my subscriber and you are still watching this video, join the community, join the Finance Hydra channel. You are welcome to join us over here. Daily analysis, daily insights on the S&P, Tesla, Nvidia, and other stocks. Thank you very much for your audience, my dear friends. Stay safe. Farewell.